Often when we first start out our investing journey, we look at some of the share prices, especially those in the US that are in the thousands of dollars like Google or Amazon, and think, how am I ever going to own one of these companies? Now, that's why when I came across a CDR, I thought it was the perfect opportunity to share it with you because we're going to go through what a CDR is, and that is a Canadian Depositary Receipt. And we'll also be discussing why you should own it and even look at some of the ways you can play it. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. I would definitely appreciate that. First and foremost, let's go over the definition as always. Canadian Depository Receipt, CDRs. So this is the CIBC website here, and this is the company that is actually putting these together. So reputable bank is supporting these, and it's global investing, just more Canadian. So we see get exposure to global companies without worrying about exchange rate fluctuations with CDRs. So they represent global companies but traded on a Canadian exchange in Canadian dollars. That is often the biggest problem, because also when we see the high prices in the US, we also know that they trade in US dollars, and there's a cost to convert your money from Canadian to US. So we see here, it's the same stocks, less risks. CDRs have a built-in currency hedge. This means your returns depend on the performance of the underlying shares, regardless of the currency fluctuations. We have covered this in a video before, which I'll link above, whether it's better to have Canadian hedge or non-Canadian hedge. But I think these are a little bit of a different platform, a little bit of a different investment vehicle. So bear along with me for a second. And the most important part is that these CDRs offer fractional ownership and easier diversification. The initial price of the CDRs when they were listed were $20. In comparison, shares of the largest companies in the world trade significantly higher, even 3,000 US per share, which is often the amount of a smaller portfolio when they're first coming out and starting out their journey. What we'll do now is we'll discuss, why you would want to invest in these, and just kind of maybe highlight some of the points that we've seen on CIBC's website. So on this Financial Post article, they say, why should you buy them? There's 3 key points as to why you would buy them. The first is, if you want to invest in a global company, you typically have to do so in a different currency, which means you have to pay currency conversion costs of 1% or more. So not only are you getting less money, let's say the conversion rate is, 1 Canadian dollar is 75 US cents, you also have to pay a company to convert that money for you, which is normally 1 to 2%. Now, if you want to learn a different way how to do it, I'll link Norbert's Gambit above. That's a video I did, particularly converting Canadian to US in your stock brokerage, or just the commission fees. So check that one out. But basically what they're saying here is that if you don't want to pay the cost to convert, if you don't want to have to pay that currency exchange fee, then this is the perfect thing for you. The second, it removes the effects of currency fluctuations from any returns obtained by a stock held in a different currency. So if the Canadian dollar happens to go up or down, you're basically mitigating that risk, and CIBC is doing that in the background for you, so you don't have to worry about that. So what it's saying is, if Amazon is up 1% in a day, then this CDR will be up 1% in a day, and they take the currency risk out of the equation. The third is that CDRs can be bought in fractional shares, making companies with high stock prices more accessible for retail investors. So like I mentioned before, instead of Amazon being, $3,000, you can go in and buy this company for 20 Canadian per share. But what you're really playing is the percentage differentiation, or the growth over a long term will be representative. It'll be comparative. So if Amazon over the next 5 months goes up 5%, then these will go up 5% as well. So moving on, where can you buy? So right now, the CIBC has listed on the NEO exchange. This is a Canadian, you can invest in this in every single brokerage on the Canadian side of things. And I believe we'll go through a little bit later the types of companies you can buy. But we'll be discussing right now why they're on the NEO and not the TSX. So CIBC said it wanted a stock exchange driven by innovation and still simple to access. There isn't a difference when it comes to buying and selling shares on NEO compared to the TSX. The CDR fractional shares go up and down depending on how the underlying stock is trading on the NASDAQ. So we'll discuss some of the ticker symbols that are there and some of the ways that you would be able to find it in your brokerage. But CIBC has chosen NEO because of the way that they're coming to the market with something new, something different. So this next article goes through some of the companies that are listed so far on the NEO exchange presented by CIBC. We have AMD, Berkshire Hathaway. And before we get into a little bit more, the thing that I'd like to point out is that when you're looking for stocks on the Canadian exchange, you normally put the ticker symbol in and then .to. For these, you're going to be putting the ticker symbol in and then .ne, and that NE is reflective of the NEO exchange. So what you would be doing on AMD, for example, is going AMD.NE, and then you would be able to figure out what that's trading for. You'd be able to go into your brokerage, your TFSA, and buy these companies. So you see that they have some relatively good companies. We have Costco here, which has definitely been doing wonders over the past couple of years. Salesforce, most of the tickers are the same. The basic thing, again, is just the .ne if you're going to look up what the quote price is. Now, some of the ways that I like to play it and some of the ways that I've recently added is Amazon. So Amazon is obviously positioning itself to do great things. They're obviously building a lot of warehouses. They're taking over a lot of market share. There's a lot of complaints as to what they're doing. But I think the fact of the matter is that when I personally look at Amazon's stock price, I'm not going to be able to afford a lot of shares if one, let's say, for example. So when I say, hey, I still want Amazon in my portfolio, but I don't want to have a full 3,000 US allocated to Amazon because that percentage would be too high. Like, I don't want to have one share of Amazon. Let me go in and buy $1,000 worth of this CDR on the Canadian exchange and still be able to rise or potentially fall with what Amazon does. So we also see Apple, Netflix, Tesla, Microsoft, Walt Disney. A lot of people would suggest ETFs. I would definitely suggest ETFs. But if you are particularly in love with a company, whether you're, a big fan of Walt Disney, you're a Disney Plus subscriber, you want to own Disney, and you don't have enough for the 130 US dollar per share, wherever it's trading at today, you just want to buy $100 worth per se Canadian, DIS.NE. Check that out. I think it's revolutionary what CIBC is doing for the younger investor that's getting into the game and especially controlling their own destiny. Now, just wanted to show you an example here. What I've done is I've put together on Yahoo a comparison between Amazon CDR, so AMZN.NE, in comparison to AMZN, which trades on the US exchange. And you can see the yellow line is Amazon stock and the blue line in the background, that is the CDR, and you see the performance is right on cue. Now, you might have some differentiation where the US market is closed, but the Canadian market is still open, and that's where you see a little bit of the bounce. But these two numbers should be the same over a long period. Like I said, if Amazon goes up 5% over the next month, then the CDR2 will go up 5%. So a little bit of a rough day as I'm filming this in the markets. This dropped to 1786 Amazon.ne, the CDR. So down 6% on Friday there. And I think a perfect opportunity for those that want to own individual companies and are a big proponent. We've seen the big companies that they've been able to put in CDRs. I know they're interested in growing this into a multitude of different companies, but just wanted to throw this on your radar. It's definitely something that I found interested. I've moved into in my own portfolio. Do your homework, do your research, see if this is the right fit for you. Let me know down below if you're interested in buying into these CDRs. But if you have any questions, definitely throw them down below. Be happy to help. If you're still here with me, hit that like button. I definitely appreciate that. Have a great week in the markets. Happy trading.